Good weekend all. Ira Epstein of Linn and Associates with your SPDR ETF video. And this is your market wrap up on a weekly basis for Friday, May 29th, 2020. And on the weekend, we look at only the weekly charts. And the reason is we want to get the bigger picture rather than the day-to-day charts. Now, the event of today, and obviously what we were all looking for, was the president's news conference, which yesterday came out and scared the heck out of the markets because the talk and the rhetoric was that they're going to take away visas on Chinese students and some Chinese researchers here that we think have to do with the People's Liberation Army in China. The second thing was we were going to slap restrictions on Hong Kong and take away their most favored status. The third thing was, of course, more fighting, just more fighting, just more fighting with China over literally everything, including human rights, where we have both a bill that was passed by the Senate and the House condemning China over the treatment of the Muslims that reside there. Well, to make a long story short, the president came out, he glossed over everything I just said, but that was what he did. He glossed over. There were no details on anything, and the market liked it. The market liked the fact that he was rough on the rhetoric, but no details means nothing's been done yet, and the market did this sigh of relief, and it went back up into the stock market. When we take a look at the tech sector, I've been saying there's a gap in the chart right here that this market is trying to fill right now. I would expect that as it gets filled, I'm hoping it gets filled, we see if the market wants to continue or is it going to back off from that level. The pattern is bullish. You still have the pattern of higher lows, higher highs. What's been the most bullish sector in stock indices and in sectors of stock indices? These. The tech sector, the FANG stocks, you know it, we've seen it, and there's no reason to believe it's not going to stay that way for the foreseeable future as like a made-to-order event. This COVID-19 pandemic got everybody used to Zoom and buying more cable outlets or buying a Hulu TV, whatever it is. It got you going. Amazon, it proved itself during all this. So lots of positive things happen on the tech. Now, we had an outside week up, right, with this week. An outside week approaching a gap in a chart always scares me. Here's why. My rule of thumb is that if you take out the low of an outside week up the next week, which is this one coming or the week after that, it is a bull trap, and it means a reversal is likely, taking the market possibly back down to key moving averages, which in this case would be 89.98. So all my horns are up, if you will. I'm not giving up the idea of bullishness, but I am aware that as you fill that, if you start backing off through there, it might be time to say, no, you're not going back to that high. You're going to back off a bit right here. When we take a look at the Bollinger Bands, they're way up here and way down here. For the moment, I don't think they're in play. And the reason is, in order to get there, you have to have almost a 10% rally right off the bat. That's a lot to ask of the market. It can happen, of course, but that's a lot to ask. So I think that you look at that and you say, okay, I've got momentum up, I got bias up. It's not the Bollinger Band I'm focusing on as much on as filling this gap right there. That's just my interpretation of it. When we take a look at XLI, the industrial sector, well, we know it's improving. Factories all over America are back to work in some manner. We're looking at the autos back. We're looking at Boeing call people back. And I realize people get fired in different shifts and all that, but people are going back. The market is waffling. It finally got back up, and we can see this. For the first time, it got back up and got to the 18-week average. Okay, so we've got about a 50% plus retracement. Momentum is up, not trending. You have the higher high and lower low with the bias up, so not trending. The energy sector, after this whole break in March, you got back to that 18-week average. That should be the resistance point. We'll see if it can add from there or not. Certainly the trend is up, but you haven't had a weekly close over it yet to get the bias turning up. QQQ, well, is the market going to go and make a run for the highs? It could. That would be new all-time highs. And again, as I said, this is the strongest sector. You have an outside week up. I'm going to repeat what I just said. And the other. If you take out this week's high, it's a good sign that as you fill this gap in here, and it's filled, that the market's running out of momentum and wants to back off a little. Until it happens, it hasn't happened. It's the what-if scenario. To get further up to the Bollinger Band, well, you got to get up to 248. That's going to be a big jump, as you can see. It can certainly happen. In the emerging market ETF, this is your very first challenge of the 18-week average. When you first hit it, you often waffle at it. I'm not saying it has to. I'm saying what often happens. Going for the week home, trend up. What else? Bias up. You're over the 18-week average. What else? Momentum up. So until you take out 5470, this market's converted itself, and it's worked hard since March, into an uptrend. I hate when you take all that work and finally I can say, well, now it's bullish. You're asking an awful lot to go to the next level. And by the way, the next level is 6407 to 6463. When I look at GLD, the trend is up, the bias is up, the momentum up over the 18-week average, higher lows, higher highs. Next stopping spot, if the market continues to go, 168.78. I don't want to see 158.10 taken out. In the gold miners, as much as we saw the daily charts on the miners drop down to the lower Bollinger Band and find the support, this market's never done that. It's just kept itself on the longer picture bullish. Higher lows, higher highs, you can see that. Upside bias, until it's broken, you'd have to take out 3131. This market still looks good. You'd need a 10% drop in it to get through that number. We've been in a correction mode in TLT on the weekly charts. You've got the lower highs, lower lows. So the swing line's down, fully countered by the fact that the bias is up as you're over the 18-week average of closes, and momentum drifting to the downside. I don't see a setup there. In FXE, I see a breakout to the upside. Higher lows, higher highs. First settlement, a strong one, over the 18-week average. Bias up, trend up, momentum up. I look for support on breaks into that 18-week average of closes. That's my news that I look at, and I didn't know where that ended today. So if you're an ETF trader, I set you up in the afternoons. Now let me explain what I do. In the afternoon, and I'm giving you an approximate time, 4 o'clock in the afternoon or so, I record a SPDR ETF video. And in that particular video, what I do is I'm going to review with you the different sectors, what the markets are doing, and the idea there is to help you with chart patterns. Now, it's a subscriber video. You're not going to get it on your YouTube. You're not going to my website and seeing it unless you have your user ID and your password, or in our mobile apps. But from there, they all play. And the idea is I try to tie this together and get you ready for the next morning's trade. And with the futures morning subscriber video, it's either confirmed or denied. Why? Because as you know, other than the individual sectors, just about all the major ETFs are relying on what the futures do in the interest rates, the stock indices, the currency markets. I can go on and on. But when you look at all this, that's it. We have to redo this ad because I've added probably 3 more charts, and I want to add another group of them. Very shortly, now that summer's here, I'm going to be able to start my webinar series again. You'll say, why in the summer? Well, I'm trying to figure out the best times for it is all, but I've got everything pretty well set up, and I've got my, if you will, how we are set here. I'm going to keep the studio away from our office, and I know where I'm doing things now, so I run back and forth, office back here, but I live downtown Chicago. It's like in New York. It's nothing to get to and from everywhere. Got a lot of transportation. But this is what I cover. And the idea is to give you the ideas as to what the markets might do, might not do, what to be on the lookout for, like we just covered in outside days, warning signs. Well, those are the things that I try to do for you. Everything I do is inexpensive. How do you get it? Go to our website at www.iraepstein.com. Go to the research area. We've done a fact sheet. We explain how everything works, and away you go from there. I'm Ira. You have a great weekend. You can also click here if you're watching me on YouTube. It'll get you all set up. I think you'll find these SPDR ETF videos and the futures morning videos give you what you need and that other edge in terms of at least my understanding of what the markets are doing and how I'm interpreting them. I'm Ira. You have a good day.